Making money the Wykoff way. Legendary technician Richard Wykoff wrote about financial markets at the same time as did Charles Dow, Jesse Livermore, and other iconic figures in the early decades of the 20th century. His pioneering approach to technical analysis has survived into the modern era, guiding traders and investors on the best ways to pick winning stocks, the most advantageous times to buy them, and the most effective risk management techniques. Wykoff's first rule tells traders and investors that the market and individual securities never behave in the same way twice. Rather, trends unfold through a broad array of similar price patterns that show infinite variations in size, detail, and extension, with each incarnation changing just enough from prior versions to surprise and confuse market participants. Many modern traders would call this a shape-shifting phenomenon that always stays one step ahead of profit is seeking. The second rule raises the misunderstood issue of market relativity, telling traders and investors that context is everything in the financial markets. In other words, the only way to evaluate today's price action is to compare it to what happened yesterday, last week, last month, and last year. Wykoff established simple but powerful observational rules for trend recognition. He determined there were just 3 types of trends: up, down, and flat, and 3 time frames: short term, intermediate term, and long term. He observed that trends varied significantly in different time frames, setting the stage for future technicians to create powerful trading strategies based on their interplay. Richard Wykoff established key principles on tops, bottoms, trends, and tape reading in the early decades of the 20th century. These timeless concepts continue to educate traders and investors, nearly 90 years later.